Let me ask you something. Have you ever tried to get bank financing for a deal that clearly makes sense, but the bank just doesn't see it? The project is solid, the cash flow is there, but the structure doesn't fit their box. That's because traditional lending isn't built for complexity, and that's exactly where structured finance comes in. In this video, I'm going to break down what structured finance actually is in plain English, how securitization works, why it matters for Canadian businesses and developers, and how the right structure can unlock capital that traditional lenders simply won't touch. Structured finance is not about getting a bigger loan. It's about changing how the deal is looked at entirely. Instead of asking whether the borrower is strong enough, structured finance asks whether the assets and cash flows are strong enough. That's a completely different mindset. Because now, instead of forcing your deal into a rigid loan structure, you build the capital stack around the deal itself. Here's the reality most people don't understand. Banks are not flexible. They rely on fixed underwriting models, rigid risk thresholds, and standardized loan templates. So when your deal is too large, too complex, or slightly outside policy, it gets declined. Not because it's a bad deal, but because it doesn't fit the system. There's a fundamental principle in finance. The value of any asset is the present value of its cash flows. Structured finance is built entirely around that idea. Instead of relying only on corporate credit or balance sheet strength, we isolate leases, receivables, mortgages, and contracts, and structure financing directly against them. Let's simplify securitization. You take a pool of income-producing assets, move them into a separate entity called a special purpose vehicle, and that entity issues securities to investors. The cash flows from those assets are then used to pay those investors. That's it. You've just turned long-term income into immediate capital. Now here's where it gets powerful. Not all investors want the same level of risk. So the structure is divided into layers, called tranches. Senior tranches carry the lowest risk and lowest return. Mezzanine sits in the middle. Equity takes the highest risk but also the highest upside. This allows you to attract more capital, lower your blended cost of funds, and build a structure that actually fits the deal. For Canadian developers and business owners, this is where doors start to open. Structured finance can unlock capital when banks say no, reduce overall borrowing costs, improve liquidity for growth, clean up your balance sheet, and transfer risk to investors who are built to take it. It's not just financing, it's strategic capital engineering. Let's make this real. Imagine you own a portfolio of income-producing properties. Instead of waiting years to collect that cash, you can pool the assets, securitize the income, and raise capital today to fund new developments, acquisitions, or expansion. That's how institutional players think, and that's why they move faster. This is also where most deals either succeed or fail. Because structured finance is not something you figure out as you go. It requires precise structuring, disciplined financial modeling, investor alignment, and execution. At Equus Capital Finance, we don't just introduce lenders. We design and structure capital solutions that actually work in the real world, across real estate, project finance, and mid-market corporate transactions from 1 million to 500 million. Structured finance represents a paradigm shift where potential is harnessed from unfitting deals rather than discarded. By examining the quality of underlying assets and their ability to generate cash flow, innovators can craft tailored solutions that resonate with a diverse pool of investors. This contrasts sharply with traditional banks, which might overlook a deal due to strict guidelines. It's vital to recognize that structured finance encourages a creative exploration of opportunities, translating complexity into clarity. When approached correctly, anyone can transform their funding challenges into achievable realities through thoughtful capital structuring and collaboration. Imagine a small business owner, Kelly, who dreams of expanding her eco-friendly product line. She approaches her local bank with a solid business plan that shows a consistent cash flow from her existing products. However, the bank hesitates, citing rigid policies and outdated models that simply don't account for her innovative vision. This is where structured finance steps in, allowing Kelly to highlight not just her creditworthiness, but the strength of her product line and future growth potential. By pooling her expected income streams, she can create a tailored financial structure that appeals to investors who see value in sustainability, thus transforming her vision into reality. Kelly sits down with a financial advisor who understands the intricacies of structured finance. "Let's gather all your leases and incoming contracts," the advisor suggests confidently. "We need to illustrate the potential cash flow they offer, which will be the backbone of our approach to investors." Kelly nods, energized by the prospect of showcasing her business in a new light. With the advisor's experience in structured finance, they begin crafting a capital solution that aligns perfectly with her aspirations, aiming to unlock the resources needed for her expansion. This partnership signals the beginning of a promising journey, where innovative financing meets entrepreneurial spirit, paving the way for a sustainable future. Kelly's advisor explains, "Securitization is our best bet here. By pooling your expected income from sales and creating a special purpose vehicle, we can issue securities to investors. This allows us to raise the capital you need right away while ensuring we showcase the inherent value in your business." Kelly's eyes widen as she grasps the concept. "So, instead of relying solely on the bank, we can attract different kinds of investors who understand my vision." The advisor smiles, affirming her curiosity. "Exactly, we're transforming your future cash flows into immediate capital, all while aligning with investors looking to support sustainable initiatives." Kelly and her advisor dive deeper into the structuring process. "We'll create different tranches to appeal to varying risk appetites," the advisor explains. "Senior tranches will offer lower risk for conservative investors, while equity investors can take on more risk for potentially higher returns." Kelly processes this information, feeling increasingly optimistic. "So, by layering our financing options, we can attract a broader range of investors." The advisor nods, emphasizing how this approach can optimize their strategy. "Absolutely, by addressing the diverse interests of investors, we make your project not just viable, but attractive, allowing us to unlock the capital you need to scale your business effectively." As they continue the discussion, the advisor emphasizes the importance of discipline in the financial modeling process. "We must project your income accurately and ensure every scenario is considered," he says, pulling up spreadsheets on his laptop. "Investors will want assurance that the cash flows can support the structure we build. That confidence is key to attracting them." Kelly, immersed in the numbers, begins to appreciate the strategic nature of this process, realizing how critical each detail is to her success. With a clear structure in place, they decide to present their proposal to a select group of impact investors known for supporting eco-friendly initiatives. "I'll prepare a pitch that highlights both the sustainability aspect and the lucrative returns," the advisor asserts, crafting a narrative that intertwines Kelly's vision with solid financial forecasts. "It's not just about your business, it's about the movement you're leading," he adds, invigorating Kelly's enthusiasm. She smiles, recognizing the potential impact this could have on her business and the environment alike. Understanding the blend of purpose and profitability is crucial, and she's ready to take the next step towards securing the capital necessary for her dream. Kelly and her advisor finalize the structure, and excitement fills the room as they envision the next steps. "Once we secure the capital, you'll be able to launch your new product line and increase your production capacity," the advisor states, shifting focus to the immediate future. "We'll also implement a marketing strategy that targets eco-conscious consumers who value sustainability." She nods eagerly, picturing her products on store shelves, making a real difference. "I can't wait to see how our eco-friendly initiative can thrive, thanks to this innovative approach to financing," she exclaims, the weight of uncertainty lifting as hope takes its place. Together, they are ready to engage investors who will not only fund her dream but also champion her vision. Kelly and her advisor set their meeting date with the impact investors, both feeling the thrill of anticipation. As they prepare, the advisor emphasizes, "Remember, we need to communicate not just numbers, but a story. Your passion for sustainability and its potential for profit must shine through." Kelly nods, absorbing every piece of advice, her confidence blossoming with each passing moment. "This is more than just funding. It's about creating a legacy," she replies. Together, they refine their pitch, ensuring it resonates with the values of those who hold the keys to her dream. Excitement fills the air as they prepare for the moment that could change everything. With clear strategies, compelling narratives, and a solid financial structure, Kelly stands on the brink of transformation. As she walks into the meeting, she embodies the fusion of purpose and profit that structured finance nurtures, ready to secure the future not only for her business but for sustainable innovation as a whole. Structured finance is not complicated. It's just different. And if your deal doesn't fit the bank's box, you don't change the deal. You change the structure. If you're working on a transaction that isn't getting traction, or you know your deal works but lenders don't see it yet, reach out to Equus Capital Finance. Let's structure it properly and take it to market the right way.